Tyler Wealth Management video blog. Today, the last trading day of August, August 31st. I'm Lee Seiler. And, the markets in general for the month of August have been as flat as my high school prom date. It has been absolutely just no action one way or the other, very low volatility. In fact, we haven't had this many days of less than 1% move one way or the other. It's been about 35 or 36 days that we have not had a 1% move one way or the other. And that hasn't happened in about 7 years. So this is really, I don't know what it's setting up for. I have a feeling I know. No one knows what you're setting up for. I do have a feeling that September, which typically is the worst month of the year for stock market performance, is probably not going to be that great as we anticipate an election. As we talk about, as the Federal Reserve has said, rates are going higher at some point. Not sure when. It depends, I believe, on Friday's jobs report. Now, of course, the first Friday of the month, we always have our Commerce Department's jobs report and Labor Department's jobs report. And the bottom line is, if it comes in very hot like it did last month, there is a higher probability that the Fed will raise rates in September. If the number is a little benign, the Fed will probably hold off and not raise rates until December. But the bottom line is a rate hike is in the cards, but it's a lot better than it was earlier. Remember last year, the Fed raised rates in December, and they said look for 3 to 4 rate hikes in 2016. We haven't had any yet. So we caught a little break there. Now, what I want to discuss something is not necessarily market related, although it is a little bit. But we've been doing these for clients, and these are, maybe it's backwards, I don't know. They are college calculators, okay? What's interesting, and we've been doing a lot of these for clients, these are college analysis and calculators specific to your children. And I'll give you an example. In our calculators and our calculations, we can actually specifically say, your child wants to go to a 4-year in-state school, public, great. Oh, your child wants to go to Stetson, okay, Rollins, okay, Harvard, out of state somewhere. We can calculate that. And it is really an unbelievable number, because I'm looking at something that we did recently, and this is for a client who has a 12-year-old child, and we assumed that this child is going to go to a 4-year in-state school. So to start school 6 years, 7 years, college is going to cost about $106,000 for a 4-year education. Now, this is all in. That's room, that's board, that's books, that's everything. Okay, about $106,000. Now, what we can do in our analysis, and what we always have to do, is calculate, okay, what's it going to take to get you there? Let's assume there are no scholarships, but let's say maybe there is a college fund already set up. We're starting with $10,000. Great, let's put that in the calculation. Or we have nothing, we're not starting with anything. Or we have grandparents that are going to leave them this. We can add all that and come up with an exact monthly figure of what you need to come up with for your children's education. Now, what's interesting, a 10-year-old, I told you, now a 12-year-old college is going to cost about $106,000 for 4 years in an in-state school. And we just put UCF in there because they're all pretty much the same as far as tuition costs and other fees. But if you're 2 years behind, with inflation, college is going to cost $119,000. So a 10-year-old, when they start school in 8 years, expect I'm paying about $119,000. So there are ways to do it. 529 plans are a great way to get that tax-free accumulation on your assets. But what I'm offering you is contact us. We will do an absolutely complimentary, because I think you need it, because it gives you a roadmap, a plan as to what you're going to need for college education. In these numbers also, we have a conservative market appreciation number, but we also have inflation at around 6%, because college costs are running at a much higher inflation rate than the general economy. And that's what some planners don't figure in. They may say, oh, what's our inflation rate? 2%. Well, that's what we are now in our general economy. But as far as college costs, they've been really cruising at about a 6%. So that's what we look at. And we can break it down to what you need annually, monthly, and it's really a great, great thing. And we will do this complimentary. All right, so all you have to do, message us, call the office, and all we will need is your name, your children's names, and it could be multiple children, that's fine. It's fairly easy. Their date of births. and where they plan on going to school. We can assume it's an in-state, Florida State school, and what you're starting with. You already have something put away for the child. So there's a lot of things that we will ask you, but it literally will take 5 minutes on the phone, and we'll come up with a report. We're going to try and do a 48-hour turnaround on this, okay? So 48-hour turnaround, we'll get it done for you. But again, this is critical. The market's just opened, and we are to the downside slightly. As I said, the month of August has been absolutely non-existent. If it was an EKG, you'd be done. Okay, markets opened up down 32 on the Dow, down 13 on the NASDAQ, down about 4 on the S&P 500. Remember, September, ugly month. We'll see what happens, but the election coming up in November, I foresee some volatility starting to pick up here. Hey, I'm Lee Seiler, Seiler Wealth Management. Contact us if we can help you. We'll do the college analysis for you, complimentary. Have a great day.